Welcome back to the Money Effect, where I bring you all news, money, and finance and crypto related. Let's get it. So, this segment now, we're just gonna just touch on the crypto market. It's been about, let's say, 90 days of consolidation. Haven't really since we hit the all-time high of in Bitcoin of $73,000, and I'll say it in dollars, just easier for me to understand. If you're looking in a different currency, then if you do the exchange rate to that respective currency. But yeah, since then, we've really just been in the consolidation phase. Slight dip below 60, and then rallied up to 71 this week. Looked like we were going to surpass, but then we kind of pulled back on Friday. So we just talk about some of the more important themes going on right now. So when it comes to regulation, obviously the big recent news anyway was the Ethereum ETF was approved. A lot of people didn't think this was going to get approved. We had the Bitcoin ETF finally being approved. That was something that was in the works since 2016. There was applications and they were getting rejected on every kind of possible avenue was getting rejected, and eventually, BlackRock came into the play. BlackRock have never had any ETFs rejected. They're dealing with 1 trillion worth of assets, and the ETFs were approved, and they were approved basically on the principle that the SEC in America didn't really want to have kind of any issues with court cases and things like that, because they didn't really have a leg to stand on. So it wasn't like they wanted it to be approved. But going forward, I think a lot of people accepted that Bitcoin is a commodity, and when we say it's a commodity, it's something that doesn't have any no value. It doesn't, you can't get interest of it off it, and things like that. So that was kind of always going to be, yeah, that one would get through the final hurdle. But what a lot of people didn't think would happen is any of the other, cryptos, because they have things like Ethereum. You can stake on Ethereum. That gives you buy Ethereum, you give it back to them. In a sense, they'll give you interest on that Ethereum, but they'll now hold it and use it for whatever, but they'll give it back to you. So it didn't look like the Ethereum ETF was going to get approved. But, in a dramatic U-turn, the people the people launching these ETFs took out the staking element, and it was approved. And that's, we're going to have an Ethereum ETF soon, but it hasn't actually launched, so the money hasn't come in. But that's a good sign. That's a good sign in the crypto. You've got a Bitcoin Ethereum ETF. There'll be now talk about, okay, what's the next one? Solana, Ripple. Maybe they'll have their own ETFs. I personally don't think so at this time. But if Ethereum, which is deemed a security, and all the others are deemed a security, is getting it, then you'd think that that's the likely trajectory one day. Whether it's this bull run, the next, it's going to happen one day. But good news. But good news from a regulatory perspective that crypto's all opening up. So let's see what's happening. But now, in regards to Bitcoin, so we just talked on the ETFs. Now with Bitcoin, we're still getting record inflows. So part of the reason Grayscale Fund, which had the highest amount of Bitcoin, was having so much exodus. People obviously had been in that fund when it was, in a sense, let's just say, not public, not accessible to the average retail person. So a lot of people were kind of selling their ETFs on the Grayscale, which was pumping a lot of Bitcoin into the market, either to then buy it at a cheaper rate at another ETF provider with lower fees, or just to take their profit, because they've had, Grayscale was the only company that had this kind of ETF product for the last, 10 years, say. But obviously it wasn't public, and it wasn't something that, institutions, pensions could get into. Now anybody can have, well, not anybody, but all the big companies, Fidelity, BlackRock, they have their own ETFs, ARK Invest, so you can go and invest elsewhere. But as we're seeing, inflows are still going up, and we saw there was a point where at the start, this has been launched since October. We've had record inflows. I think around March, preceding the halving, we started seeing more outflows than inflows. And now we're at a point where we're just seeing inflows. I think it's been 19 straight days, but Bitcoin price is still not moving. Now, it's good. We're seeing these inflows. What's going to happen next? Maybe we'll get more ETF providers. We've seen in I think Hong Kong, not China, Hong Kong has opened up an ETF. In Australia, they're not generating billions, but it's good signs that all around the world we're having more people opening up these providers. Will more companies launch? Will pensions and endowments, will they now start investing in it? That's what we don't know, but it's good news. As the supply, we've had the halving now, so and we didn't touch on the halving too much, but the halving is the rate of Bitcoin produced, not the amount. So we've had the halving now, so we're having whatever was produced every day pre March the 20th, when the halving was, post March the 20th, is now going to be halved, but that doesn't mean the total supply was halved. So we're still getting this, and it's a good sign for crypto that it's still going in. But as you can see, the price is still not moving. So this week, we looked like we were going to get to that all-time high this week, and then we had I'd say a flash crash, and the funny thing is, in crypto now, I think even myself that's been in this, been in crypto now for the last few years, I think maybe for stocks it's different. So when we say with crypto we had a flash crash, okay, crypto's gone down five. Well, you can see on the screen, maybe 2%. Bitcoin went down, Solana went down 5%, and we know the altcoins will always go down more than the bigger coins. So, but is this like for crypto, this is actually getting less volatile if you ask me, because I've seen crashes going down 20-30%, and that's what freaks me out. So something going down 5%, I don't really think that's not the end of the world in crypto sense. So maybe crypto is getting more stable, I don't know, but considering what happened, now the main theory was, we've had this whole GameStop saga, and I won't touch on that too much, but I'm sure everybody knows GameStop, and all this meme trading. We had this guy come out, he was going to be a billionaire on Friday or whatever. He did a live stream. The live stream didn't really go that well, and as you can see here, um, Bitcoin kind of fell. Was it because of him? No, I don't think so. More importantly, it was probably because of this. And as you can see on the screen, what is really going to be the trajectory, the number one factor for me that will see Bitcoin going to new highs? Because a lot of people forget that the last halving in 2020 coincided with when we had all this money in the economy, so all this, stimulus checks, quantitative easing, and such like that. That basically there was just so much money being pumped in the economy because of COVID, and that's ultimately what caused all the high inflation. And then Bitcoin ended, the run ended coincidentally with when we started seeing interest rates increasing. So for Bitcoin to go to its next level, and I don't think we're going to see the money pumped in like we did in 2020. I don't think we're going to see the dramatic rate cuts that we did in 2020, but I do hope we're going to get rate cuts. And for that to happen, we're looking at data dependence. So we've seen the Bank of Canada, the first G7 country this week, lowered rates. How far they're going to go, how deep they're going to go, we don't know. Maybe they'll just lower it once and then hold. That's not great. We've seen the ECB, first time since I believe 2019 or something like that, has lowered rates. How far they're going to go, we don't know. But the big one is we're waiting for America. America dictates everything, and America is waiting to see, is the data going to be dependent for them to lower interest rates? And at the moment, we've seen inflation slightly creep up for them. But a key one here this week was the US job data. This was predicted. This is now how many jobs the US has added. Now, if they're not adding jobs, that means the economy is not growing. That means inflation is going down because demand is going down. That means the Fed would be more inclined to cut rates. But if inflation is still sticky and the economy is still adding jobs, then hey, the Fed might they're keeping rates as they are, and they might keep it for longer. And probably the dramatic thing that would maybe even turn this into a bear run, or definitely have a significant correction, is if the Fed started hiking and going back on a hiking program. At the moment, that's not, seen, but anything is possible. But what's not seen as well is deep interest rate cuts. What's seen right now is probably higher for longer and data dependent. And this week, the jobs number was predicted to be at, I believe, 180, and it came out at 270. So that's way above what it was anticipated. So that means in America, whatever these figures are, and I'm not too sure if these figures are accurate or what kind of jobs they're pulling from, but in America, their economy, jobs base is healthy, is very healthy, and if it's very healthy and inflation is still sticky, that means that the Fed have, they'll be less inclined to cut rates. So for me, for this crypto run to really take off, that's what we're looking at. We're looking at when is the Fed going to cut. And at the moment, it doesn't look like anytime soon. We've gone from potentially 6 interest rate cuts in 2024 to basically none, and even maybe interest rate increases. That's where we're at. So most of the market, I think there's a 50% chance in September with data like this, probably less likely. So we might not get interest rate cuts this year. If we don't get interest rate cuts this year, like I said, I don't see crypto significantly gaining until then. So keep that in mind. Now, for those that are risky, you can get into Bitcoin, but as you can see, Bitcoin at nearly a trillion market cap, how much is it really going to go up by? So, we have other coins, other smaller coins, and this is one coin I'd say that's been on a great run, Jamsey coin. As you can see now, like I said, you can get into Bitcoin, and maybe if you're lucky, you'll double your money. Maybe, I don't know, most consensus is saying that Bitcoin gets to 100,000, 120,000 and tops out. Obviously, you're going to get some people saying it goes to 700,000, 1 million. I don't personally think that. I think a realistic estimate is getting to that 100K, is getting to maybe 120, 150. But that's only really a 30% to double your money opportunity. Now, if you're trying to really, if you're late to this game and you haven't been in crypto, you're just getting in now, then maybe you just want to skip to the riskier coins, the ones that can still go up by 3-5x, because Bitcoin is very unlikely to do that. It was at 15K at the start of last year. That 15 to 20K, it's now 70K, so it's already done a times 3 move, and that was really the time. If you wanted to get in, is it going to go higher than that? I don't know. But these riskier coins, as you can see, now sometimes they don't do nothing. So you see this coin hasn't been doing nothing, but then when it takes off, and you can see this coin is, in a sense, doubled in the last couple of months, or even from the start of this year, gone up times 4. So, and on a long-term scale, although it's hasn't really stagnated, it got to a peak of one. So that's maybe another 5x from here. So to hit its peak. So, if you're looking for the more risky coins, and sometimes it's hard because these coins make big moves before you even know about them. But I think if you're an investor right now, you have to be thinking along those lines of, Bitcoin is not more or less gonna double. Maybe it's time to look at the smaller coins where you can still get some value. Because I don't think this bull run is ended. I don't think it's even started in terms of the major hype. But we are, and when I say it hasn't started, a bull run to me is 4 phases. You've got, the first phase where you're consolidating. I think that was last year, between, let's say, February and I'd say last year, like the end of 2022 to the start of 2023, that was kind of consolidation. Kind of fat. We were testing the bottom, but we didn't really break through. A lot of people were saying, "Oh, Bitcoin's going to crash to 3,000," and it just never happened. That's for the brave. The brave would then start sticking there. Then you have, the accumulation. We had that from maybe January, February to about October, when Bitcoin was slowly just grinding. It got to, I think, 40K from 50K. And then we had the kind of start of the third stage of, the rapid appreciation. Probably came a bit earlier than expected. And then Bitcoin hit its all-time high before the halving. And now we've kind of gone down. So we're, to me, in the late third and the beginning of the fourth stage. And late third is when Bitcoin really breaches, I feel like, when interest rates will cut and we can sustain 73k, the all-time high, becomes the new floor. We haven't got to that point yet, and then that's when we're really going to take off. And then obviously stage four is when all the hype and the parabolicness comes in, and that's probably when most people buy. But then at that point, you get to the late stage five where you might just get eck out some returns, but more than likely is when the people that's been in since stage one, two, and even three start selling. So I don't think we're too late, but we're still in this bull run. I don't think the parabolic bull run stage has started, and hey, it might not never start. I don't think it's going to be to the extent it was in 2020. If anybody's looking at old coins and thinking, oh, well, this coin went up this much. In 2020, for example, this Jasmine coin went up to, $4 in 2020. So surely I just have to hold and it will go to $5 this time. No, it doesn't work like that. Not only does it not work like that because of the economic environment is different, like with the type of money that was pumped in 2020, also the tokenomics of the supply, and maybe there's more supply of this coin that's been put onto the market. So you have to bear that in mind. But yeah, anyway, this is the money effect, crypto news. I'm out. Thank you.